Hello and welcome. You're tuned into a brand new episode of The Big C on CNBC TV18 Prime. Well, I'm Manisha Gupta and back with your daily dose of commodities, cryptos and currencies. But what we are discussing today, well, to begin with, we will start with a quick check on the markets. The Nasdaq Composite ended last week at fresh closing highs, and the S&P 500 closed on the threshold of yet another milestone. The Dow Jones also finished the week on a high note. Remember, inflation readings this week will prove a key hurdle for a broad market index near record highs. The stocks in Asia Pacific, in the meanwhile, have been trading on a flat to a positive bias as investors await official announcements on whether the August 12 deadline for US and China tariff truce would be extended. If you look at the crude oil prices, well, we have seen some extending declines onto this one as investors await the outcome of talks between the US and Russia later this week. On the war in Ukraine, the expectations have risen for a potential end to sanctions that have limited the supply of Russian oil to international markets. After US President Donald Trump said on Friday that he would meet Russian President Vladimir Putin on 15th of August in Alaska to negotiate an end to the war in Ukraine, we've seen prices continue to decline. Previous week was a 5% of a cut, and you can see nearly a percentage point of decline continuing for the crude oil prices on your screens. Well, to discuss that and more, we are now joined by Jonathan Barratt. He's CIO at ETO Markets. Jonathan, hi. Thank you so much for joining in. It's a very, very loaded week on 12th of August and then 15th of August. You have major events coming in. And then apart from that, it also is going to be about the US inflation data that comes in on this week. What is your sense, first of all, on the crude oil prices? Because that very important US and Russia presidents meeting on 15th of August perhaps would set course of any future price movements and, of course, relations between these two countries.
Manisha, good morning. Look. Obviously, I think a lot of the outcome has to do with what Trump actually comes up with, and I think so far we know there's been so much volatility, and whatever Trump says, the market seems to react, and then it settles down. I do get a sense that the tariffs that are actually on Russia at the moment are actually starting to hurt, and I get a sense from the market that Putin's pretty keen to come up with some form of resolution. Otherwise, he just wouldn't come to the table. So I think there is a little bit of hurt, and I think that Trump has that ability to try and get together to try and get some resolve. He just seems to be a guy on the go at the moment, trying to solve so many of the world's problems. Let's see how he goes. But I do think that when it comes to oil, that's going to be a big play. Remember, we're sort of putting more out there. OPEC plus, Saudi Arabia, putting more barrels on the market, and sort of that's seeing prices lower. So it'll be based on an outcome of what happens with Trump and Putin.
Oh, well, absolutely. But are we in a position to preempt anything on that conversation?
Look. I think that if they come up with some form of solution, then I think you'll see prices come under more pressure, and I think prices will continue to trade lower. Although I'm sort of slightly more bullish, I think when I look at the range for oil, it has been, quite volatile. If we do get some glimmer of hope, prices, I think, particularly based on the crude prices, WTI, I think prices will come back to say that 55 level. But if it does get back level, then I do think prices will get a bit of a bounce. Remember, China's got some issues over there, and I expect a lot more stimulus.
Well, absolutely. Jonathan, as you said, 55 is what you're looking at. That would be around $7 to $8 down from where we are trading at this point in time. Either ways, markets also do believe that even as OPEC and allies have been talking about increasing supplies, much of that is on paper. We haven't seen OPEC on-ground supplies increase as much, and there is still those concerns about near-term tightness. Would that, in some sense, give support to prices?
Look, I think it will. I mean, I've got an overall more bullish sense for crude oil prices. I do think that once people do come out and we do see that supply come onto the market. Remember also that having a low price of oil is not beneficial to a lot of the countries. So I think to try and give that emphasis of supply tightness while also trying to get dollars in through sales is very important. So I think the market will be seeing what Putin and Trump come up with. But at the end of the day, I think you'll find that general economic demand will be the driver here. And there's some very positive things, which I must admit happening in the US at the moment, which I think we can't deny.
Jonathan, I'm just looking at the data right now, and it does tell us that when you look at the 5-year average in sense of inventories, Europe is much lower than that. US inventory is also much lower than the 5-year average. China has been buying quite strongly. If you look at the second quarter import numbers are much on the higher side. These 2 or 3 factors really seem to be supportive for crude prices. But would you say right now it is all and only about the US and Russia president meeting?
Well, I think as we know, that it's a tinderbox of ideas of what happens, and we try and work out what are the major driving factors behind where we think the market will actually go. And I'll have to say it really is a Putin/Trump scenario. It's been billed as the big one, and that's the big event that we're all going to be looking for a lead in terms of where crude will go, and for that matter, a lot of the other commodities.
Oh, well, absolutely. One more question on crude, and then I'll move on to other commodities as well. You spoke about WTI heading to $55 a barrel as a more major probability there. How would you look at a range from here on if that conversation does not go as expected, if there is more stalling, if they have to meet another time? How would you look at the prices reacting then?
Yeah, Manisha, I think what's happened generally with the crude price, as opposed to a lot of the other commodity prices, is everyone's managed to keep it in about a $20 range, 55 to 75. And it hasn't really broken outside of that. So when it comes to economies adjusting to these prices, I think I see more of the same. I don't think people want to see prices too much higher because that's going to slow the economy. They don't want to see it too much low because that's going to mean that it's not going to be profitable for a lot of the producers. So I think if it stays within these ranges, then I'm quite comfortable. And I think that $20 range sort of suits all the suitors in the market because it's something they can budget towards.
Oh, well, absolutely. I also want to move on to gold prices there. And after that misinformation, as U.S. administration is calling it, there's an indication that there would be a clarification now coming in that gold actually is not going to be tariffed when it is imported from Switzerland. But the way that we saw the volatile moves between the spot London prices and the COMEX gold prices was almost $100 an ounce at one point in time. How are you reading into these nitty-gritties when it comes to tariff? And what's your sense on the gold prices moving from here?
Well, I think it was an interesting move in terms of what Trump's actually doing in terms of a lot of these, a lot of the commodities which we're actually seeing and how he's playing it, because he seems to be playing it just one at a time, and it's sort of like he says something and then all of a sudden all these advisors come around and say, "Oh no, you can't do that. Let's try something else," because I don't think it's any of it's planned. But when I look at the price of gold, I still get a sense that we are in a range. We've tested the top side. 34.50 is on the high side. The downside has to be around that 3,250. At the moment, I see more negativeness coming out of this, but I'll see prices coming back into the lower end of the range, which I think would be well supported. Remember, we're still, although inflation is under control, this week's going to be very important. Inflation in China particularly is a lot lower. I still think that I get a sense that given there's a change around, that's still a big issue for the Fed. And I think there's still a lot of volatility in the market. So I still see gold as well supported on a dip.
Jonathan, how would we be looking at the metals then, and silver being a part of it? We've seen some stability come in for copper after that very sharp decline or a correction from those all-time highs. Aluminum seems to be trading near those multi-week, multi-month highs. Even zinc, for that matter, seems quite supported. So when you look at silver and copper and zinc and aluminum, what is it that you would watch out for in sense of tariffs, China buying, and price sense?
I'm fully focused on what happens to copper, to tell you the truth. After the big moves we've had there, we're at some very key areas or close to it, 9,600 basis the LME. All these areas are very super supportive for the price of copper. I get a sense to see how China sort of develops in terms of a shocking inflationary number we saw over the weekend. There's no price pressures at all. We've still got that deflationary spiral. And I get a sense that stimulus will be the ones that will support copper. And if that's the case, copper prices will start to trade high. We have had quite a massive correction, as we do know. So we're just trying to find our feet now in terms of where copper does trade. And I think if the US interest rates go lower and China does put that stimulus together, then I think you'll find some good support coming back to the copper prices. Anything falls over in that equation, she will go lower.
Jonathan, what's your sense also on the silver prices now? Very, very consolidating moves coming in there. 3,800 and rather $38 an ounce, and that's exactly where it seems to be trading for a very long time now.
Yeah, no, Manisha, I actually like silver, have done for some time. I actually get a feeling that it has underperformed when it comes to the other precious metals and also the other base metals. And I do think that once again it is that demand story which comes in. It's all that green demand for it. So I think that eventually at the end of the day, prices will be supported. Remember, as we mentioned before, it hasn't hit those record highs or anywhere close to it. We've still got about $20 to go. So I like to buy it on a dip. I do think now is not the right time to do it while we've got the volatility, but when we do come back a little bit lower, it'll come into support, and then I think you can buy it for the long term.
So when you do talk about dips and upside targets, what range are we talking about then in silver, and what time period really?
I get a sense that when you're looking at silver, 36.50 on the downside is probably the lowest you'd want to get it to, and then just see the price action around there. If it starts to break through that level, then we have got a technical head and shoulders in place, and that does worry me. But if we do hold that, then I think I'm quite happy. We've got to see a breakthrough that 39.50 on the top side. If we see a breakthrough there, then we're heading back to new highs up around that 40, even up to 50.
All right, then silver perhaps is a place to be then. Well, it's a buy call really coming in for gold and silver. And as far as the crude oil prices go, Jonathan tells us that 55.75 is a range where most of the producing countries and consuming countries seem to be making comfortable right now. And despite and in spite of all the news data that we have seen being coming in, crude oil prices have been trading within that range. With that, Jonathan, thank you so much for joining in with your time and, of course, your sense on all of those commodities as well. Well, with that, we'll head for a short break. When we come back, we'll have your conversation with gems and jewelry sector on what their concerns are with the tariffs and, of course, exports. Welcome back. And the gem and jewelry sector has been hit hard with 25% already effective. And we are staring at a 50% by the end of this month in case those negotiations do not go productive. I spoke with industry experts, Kirit Bhansali, chairman of GJEPC, and Adil Kotwal, who's chairman at the SEEP's Gems and Jewelry Manufacturing Association, to understand on how these steep tariffs could impact the volumes going forward and how has the month of August panned out so far and their interaction with the Indian ministers and the counterparts in US. Take a look.
Manisha, first of all, the 25% was also difficult to bear. 50%, the entire gem and jewelry sector is in a big shock. It's unbearable. I don't think a single parcel will be exported from any of the place from India from today onwards. So we are watching. The delegation is coming, reaching Delhi on 25th. Last round of the negotiation will take place. That will be 5 days. Today morning, I was speaking to the Joint Secretary of Commerce. They are hoping for the best, but you know about the Trump's decision. So at present, it's difficult to say anything. But the good thing is that it's not only India is suffering. Adil will explain you better than me about the profitability of Indian gem and jewelry sector. We are doing this business with a very minimum margin, but the American retailers are making 60 to 100%. And they have about 70,000 small and big outlets. So their supply of chain will be disturbed. So, and the big December season is round the corner. So they are also going to take big hit. So they will also think to roll back about this tariff. But we will have to wait till 25th, Manisha.
Oh, well, absolutely. And as you rightly pointed out, yes, the holiday season is something that is when the US sees a lot of jewelry buying. That's around Christmas and New Year. And if we do not see tariffs go down until then the US consumers also are going to be paying on the higher side. Adil, how would you look at the profitability, especially for the Indian markets right now? We are huge exporters. And as we continue to say, because India is where you have handcrafted jewelry, that can't be replaced by anywhere else in the world. You could be looking at competitiveness, but the way the Indian markets do work is quite different. How are you looking at profitability of that? And how is your sense at 25% tariffs and then 50% perhaps?
Manisha, at 25% tariff also, it's very challenging. Initially, when the 10% tariff came, we shared 5% with the retailer and we took a hit of 5%. When the 25% came, of course, they asked, what can you share? And we said, we cannot share anything with you because whatever we shared was our profitability. Our net profitability is 5%. We shared that with you just to keep the business going. Now they have understood it and they have agreed to bear the increased tariff. But the orders are very limited. They have told us whatever you can export till the 27th, we'll take it in. But that only a few of them have said. The balance, the exports are lying with us. We are manufacturing, holding it for them. We have not got any clearance to ship it out. So we are in a dilemma. We are manufacturing, we are holding it. Will they take it up? Will they not take it up? This is a big challenge for us. Profitability is down the drain. There is going to be no profitability this year at all. We are staring at very large losses. We have workers, let's say in SEEPs, we employ 100,000 workers. There is no work for them after a few days. Whatever few orders are there in the pipeline will finish. There are no new orders. So how are we going to look after 100,000 people in SEEPs? Very, very challenging.
Adil, this is about jewelry clearly, and India does export 85 to 90% of its polished diamonds, and the US is the biggest market there as well. With the kind of tariffs that we are looking at and with no exemptions within this segment, jewelry is one part, diamonds is other, would you say?
Well, yes, the center stones all along were exported. There was no duty. We were paying duty on the smaller stones. Now the big stones also have a duty. So imagine somebody, the big market in USA is the bridal market. Very large amount of jewelry is sold in the bridal market, an average price tag of $7,000 to $8,000. Now with this new tariff, the center stone also attracting duty, the price is going to go from 6,000 to 7,000 to maybe 10,000, 12,000. So eventually the USA consumer has to buy such an expensive ring. They all have budgets. So their budgets are going to be haywire. And I think it's going to be very challenging for even the US consumer to accept such a big price increase. They've been watching prices are at 6,000, 7,000. Now suddenly in 3 months, when they see the price at $12,000, they're also going to stand up and say, what's going on? And whether they postpone their purchases, obviously a lot of them will postpone their purchases. Uncertainty, total uncertainty on the impact on the jewelry industry.
Oh, absolutely. Mr. Bhansali, your sense on diamonds really, and not just diamonds, I mean naturals and lab-growns and gemstones and polished and diamond and jewelry, everything gets impacted here. How are you looking at those numbers?
I will vouch Adil's statement that the biggest worry, Manisha, is right now our workforce. As Adil mentioned, about 100,000 workers only will be directly fitted only in ships. More than that will be affected in Surat. Also in Jambur, Surat, Sitapura. They are also exporting color stone. 50% their market is US. So now we are big worried about 2 lakhs workers will be directly affected from tomorrow onwards. So we are in talks with various chief ministers like Uttar Pradesh chief minister, Madhya Pradesh, Rajasthan chief minister, Gujarat chief minister, and Maharashtra chief minister. Yesterday I spoke to Gujarat chief minister directly, and he gave a good response that let's wait and watch Kirit till 25th. If nothing is coming out, then we'll sit together and we'll try to save this industry definitely, because Surat is the biggest manufacturing hub in Gujarat. So I got a good response from Gujarat government, and I'm sure that Maharashtra and Rajasthan CM will also respond well.
Well, Mr. Bhansali, of course, what we are staring at is, as Adil also said, no profits, a lot of people perhaps losing work out there, and the price is surging so high that you could perhaps be looking at demand being hit and no buying, or perhaps postponed as well. The other thing really is about on how all sectors seem to be working right now, and various countries also seem to be working right now, is taking some incentive programs from their own each governments. So when it comes to India, Mr. Bhansali, what is the conversation that we are having with the government in sense of support, incentive, some hand-holding, some subsidies for the sector? Because as you said, 10 was not profitable, 25% is losses, and 50% is a no-starter.
So, Manisha, we wrote a letter to Prime Minister, Finance Minister, and Commerce Minister, all three. But the Parliament is going on. I think we'll get a response immediately from CIM. Hopefully, Monday, me and my ED and with some delegation, we are going Delhi to meet CIM first. But everybody from ministry also saying wait till 25th.
Oh, well, yes, it's all a wait and watch until 25th on what conspires from there. But Adil, the way the situation is, and it's all a wait and watch, and we're talking about nearly 15 days from where we stand right now. It's 2 weeks, and these 2 weeks, what is the sense that you have from the industry?
I think the industry in the next 15 days, there are no new purchase orders coming. We're all at a wait and watch standstill. Okay. And our demand from the government right now is that allow us to at least manufacture in SEEPs, the jewelry for the local sector. This has been our long pending demand for the last 3 years, that allow us reverse job work. And it is time that the government takes heed of our requirement and at least allows us to permit to manufacture local jewelry. This way, at least we can keep the workers fully occupied, fully employed, and the disturbance to that extent will be less. This is really an ask, and I think it's an ask which should be given yesterday.
Adil, we've been talking to a lot of economists as well, and this is a number that I just want to run by you, which, and this is an expectation and approximate numbers really, where the expectation is that if there is 25% tariff, which we are working with right now, the GDP growth could be to the tune of 6.2%. But if, and there's a big if there, if we go to 50%, then India's GDP growth will decline sub 6, 5.8, 5.9 are the kind of numbers that we're getting. So at a time when we look at these tariffs and we're looking at slower growth coming in for the Indian markets, how would you see that impacting overall gems and jewelry sector?
It will, I would say, almost obliterate the market for exports. Imagine with 50% jewelry, there is just nobody in America who's going to buy any jewelry from India, correct? So now what people have started doing is that they will send us the castings from USA and we'll set the stones. To that extent, the duty on the gold part is not applicable in the United States. But these are all temporary band-aids. These are not long-term solutions. We may do that for a little bit of time and get through the season, perhaps. Again, it's not clear that when goods enter the United States, what will be the duty on diamonds and the labor component of it, whether it will be allowed, what kind of documentation will be required. These are all work in progress. We're discussing every day with lawyers in the US as to what is their suggestion on that, what is the paperwork, will the US Border Customs allow these packages to go through. So many challenges that we are simultaneously facing head on. And the season is in front of us. Our deliveries have to go by 15th October latest in order that the goods are on the shelves. And if the goods are not on the shelves, there is no season. And it will also impact the retailers in the United States. It's not just that it will impact us, because all the newness is all ready to go to the United States and be on the shelf. If there is no newness, they will be also impacted. And so it's an overall concern for the entire jewelry industry between India and the USA.
Oh, well, absolutely. That does not sound good at all. Mr. Bhansali, a final question to you then. And, gem and jewelry segment clearly staring at a lot of dismal right now. But on the other side, we're also reacting to reports, and we did see gold prices react to those reports of US gold imports from Switzerland, which will attract also a near 39% of a duty. A lot of people tell us that US wants to be the gold refinery of the world. So US is trying to do a lot of things there. How are you reacting to this? And gold being a raw material for many countries, how will this disrupt the markets?
No, everything is just one. Manisha, Adil have explained you very well. We have called an urgent meeting after about 4 o'clock. We have invited about 200 exporters to understand all this dilemma. And as Adil said, that we can import from US. That is also a dark area. Nobody is 100% perfect about the rules and regulation of imports in US. So I don't want to take any risk by using any shortcut if any exporter will get arrested in US, or again my industry's name gets spoiled. So we have called an urgent meeting to understand all this.
All right, Mr. Bhansali, we will, of course, connect with you after that meeting as well on what conspires there and how are you really reaching out to the ministry for the subsidies and for incentives that you've mentioned earlier as well. But thank you so much for your time, really, at CNBC TV18 Prime. Mr. Bhansali, Adil, thank you for your time. Appreciate it.